PropertyGuru now offers home refinancing. With Smart Refi, our intelligent loan tracking tool, you can always be sure you enjoy the lowest mortgage costs. Simply set up your loan profile to match your refinancing goals in just 2 minutes and get a personalized breakdown of your potential savings. Smart Refi will then automatically compare your current loan against the market in real time across all major banks every day. And to ensure you never miss the next best moment to save more, Smart Refi alerts you when it's the best time to refinance. Best of all, it's fully secure and totally free. Start saving today with Smart Refi from PropertyGuru Finance.
You're watching the PropertyGuru Asia Real Estate Summit 2021 Virtual Edition. Please share with us your thoughts about the discussions and presentations this year. On social media, please use the hashtags #GuruSummit and #InspireInnovators. We've reached the fourth and final segment of our summit. In this segment, we'll listen to our global expert speakers to tackle data innovation as we commit to being the catalyst for change in the real estate sector. We'll now listen to our talk show featuring Michelle Martin, veteran broadcaster and popular radio presenter on Singapore's Money FM 89.3. Michelle will chat with Rani, Kaur, Managing Director and Head of Strategy and Business Management at the Bank of Singapore. They will cover the practical uses of fintech and tokenization in Asian real estate and other revolutionary financing tools.
Welcome to the PropertyGuru Asia Real Estate Summit's virtual edition. I'm Michelle Martin. Real estate on the blockchain. What does it mean to tokenize a real world asset? Could you one day pass a building and own part of it by scanning a QR code? Well, it's a lot to unpack. And today we're talking about the uses of fintech and its present and perhaps future applications for Asian real estate. Rani, Kaur is with us here to share her thoughts. She's Managing Director, Head of Strategy and Business Management, Global South Asia and Middle East, Bank of Singapore. Welcome, Rani.
Hi, Michelle. Lovely to be speaking with you today. Thank you for taking the time.
Oh, I'm so fascinated by this topic. So real estate is one of the most valuable asset classes in the world, but it's highly illiquid. So my first question to you, Rani, is how promising an application is the development of real asset tokenization to real estate?
Well, I think if you asked me that question a few years ago, my answer would be quite different. But what we're seeing today, even in our own home country, Singapore, directionally, there is a much higher pickup of crypto as an asset class. Even Singapore as a country is looking to participate in this at the beginning of early stages. So we're seeing quite a bit of traction on that front. But I think what is also interesting is I think we all know about the NFTs and how that has also kind of blown up on our screens, literally. And in the past, if you were to ask me that question, I would probably say, still, nascent. And my answer is still close to that. I think there is still a lot of scope in terms of building that proposition, developing the use cases, finding the monetization value in those journeys. But will it go quickly? Yes. Will the pace be much faster? Yes. Capital is going in that direction. A lot of companies, a lot of talent, and we're seeing this in Singapore, Hong Kong, Dubai. So, in summary, I do think it holds a lot of promise. I do think it will take different shapes and forms as we go along and see how it applies in different legal frameworks, regulatory policies. How do we deal with some of the obvious problems of putting such things on the chain?
So some way to go still with the legislative framework for such digital assets. In fact, I think before we get into the nuts and bolts of the topic, we should get into some blockchain terminology. What do we mean when we talk about the tokenization of real assets, Rani? Is it wrapping a real world asset with a digital wrapper, or creating a digital twin of a real world asset, or putting real estate shares on an exchange? What is tokenization, and how could the tokenization of property work here in Asia?
So it's kind of all what you just said, and then a little bit more, right? So I mean, if I could just liken it to something that is easily understandable, I would start with the basis of it being a share certificate of sorts,
Mm.
and it kind of represents your, you put a lot of in that share certificate, and digital share certificate, your ownership information, things that are related to construction plans, your investor rights. It's all mapped in digital form and recorded in a smart contract. Now, a smart contract is literally what it says it is. It's just a clever contract, right? And these are basically programs that run when predetermined conditions are met. So just imagine your real world contracts, all that administration you used to do operationally, now being coded into a program that runs automated processes to solve or match your clauses along the way. So smart contract basically automates that part for you once your token is live, right? And so, I mean, now that we understand that its token has all this stuff in it, and there's a smart contract that operationalizes it on the chain, the blockchain, which is what we know as the distributed ledger. And what actually happens along the way is the value of the property is then distributed among a fixed number of tokens. Now, tokens is and I'll explain that a little bit more later, because I just want to go into the nuts and bolts here. And basically, they are issued to investors who will receive a bit of like what one might call a receipt, a digital receipt, and it could represent anything. So, I mean, the permutations are actually quite a lot, and maybe in the real estate context even more. So for example, ownership of an underlying asset, equity interest in a legal entity that owns the asset. That's the most common use case we're going to be seeing working out in Singapore and Hong Kong. An interest in a debt secured by an asset, basically an asset-backed security, if one would want to extrapolate it into financial terminology. A right to share in the profits of the use of an asset. So, as it's being used, there's, valuation improves, or you're getting some proceeds, you have the right to participate in the upside. And there are many other permutations. And what is really cool about this is that after the initial issue, you can actually put it on whatever available digital exchanges there are, but you could also trade it peer to peer. And that is where a lot of the liquidity comes in. You're almost kind of listing it and having it available for many more participants to take part. The unique thing about token, which I will just want to call out the unique features that make it really interesting. We talk a lot about fractionalization, and it's basically, when I'm trying to relate it back in layman's term, we've gone to unitizing assets already. We understand that. Now we're taking those unitized assets, the way we see them in single units, and then slicing them up even further into fractions. So you're having smaller pieces of assets available to more people at a lower unit cost. And that naturally, opens up the investor pool by many times. And that is where a lot of that impetus or interest comes from as well.
With regulations in Singapore requiring REITs to distribute 90% of income to unit holders, what compelling reasons are there to buy tokenized real assets versus, say, taking a REIT route?
I would say that the main difference between REITs and tokens is that REITs are portfolio of assets. They're managed by asset managers, and it could be a mix of different assets, and you pay a fee to participate. You don't really have any control. You're delegating the control away, and there is a certain rate that you can make out of it. But when you're looking at tokens, it kind of is a little bit more targeted at a different, I would say, user pool. Firstly, the bit more technology-enabled investor base. It is also allowing you to own single properties. So, for example, if you had a dream of owning a GCB in Nassim Hill, you could potentially own a fraction of it, in one of those many permutations, and participate in the upside. Use that token on the blockchain very securely, kind of do some trading with someone else, participate in the valuation. So you don't need to go full on into an entire REIT investment. Also, it allows you to decide on your own portfolio construction, which I find quite interesting, especially in this day and age. Real estate is typically a diversifier, portfolio diversifier, right, with low correlations to most other asset classes. So you do see the benefits of being able to drive your own portfolio construction and participating in it in the way you choose to. I think it's also that promise of tokenization. And actually you can do it in different ways. So for example, if it was a student housing or healthcare housing, and you can participate in different ones, build a portfolio of your choice securely on a chain. You pay much less fees. That's at least the current promise based on the use cases, but it does make sense. So there's quite a lot of differentiation between the two. And I would say that it really depends on what your inclinations are, but also what your risk profiles are. They're just depending on what you're interested in.
Can you touch a little on what you consider to be the risk aspects to do with tokenization of property?
Yeah, so actually they're still being worked out. I mean, even our regulators and legislators and lawyers and everyone's pretty much hard at work trying to work that out. But I think essentially as an investor, there are probably maybe 2 or 3 areas that I would call out. One is investor protection. So I think it's important to understand that blockchain is new technology, and we've obviously seen in the news quite rampant abuse of it, theft or scams, etc. I think that is obviously something anybody or entity would be very concerned with. So investor protection comes number one for me, and that's why in Singapore, you need to be an accredited investor to participate in such initiatives. The other one that really I would call out is security. I know DLT is known for being a very secure and safe place, but I don't think enough work has been done to make sure that the security that is warranted is preserved over the duration of time. And when you're making changes, it's very hard to make changes on the chain. How are they being incorporated? And so I think still quite a bit of time needed to operationalize those aspects. And I think finally, I would probably call out the risk of corruption or potential maybe corruption is a bit of a harsh word, but you don't really know exactly who's behind some of these, I guess, tokens when you're trying to put together the deal structure, or when you're incorporating the smart contracts, which also have KYC, enable KYC checks, that there is proper end-to-end thinking around the anti-money laundering risks that could be associated with participating in something like this.
Well, speaking to the people involved when it comes to the tokenization of real estate, do you think how large a disintermediation force is tokenization in real estate? Does it bypass lawyers, banks, property managers? I mean, are institutions like yours becoming involved in the tokenization of property?
Yes, I believe that there is, and this is my view on disruption in general, I believe that there is space for everyone to participate. It's just that you may not be doing exactly what you used to do in the past. So I think the role will definitely shift, but there is definitely a role to play. And I call out the role to play in the offline, what I call off-chain activities. Things like when you're working on financing the property, the original financing of the property, if you want to refinance it to make it work, putting it into a framework, setting up the companies that are required to hold this property. You're looking at a lot of work around selection of properties. So I think there is still a lot of offline contributions from the stakeholders that you've mentioned. And they continue to play a part in the whole end-to-end creation of a tokenization value chain. So that's how I would position it. Of course, then there are some things that one would say used to be done by other parties, third parties, that might be automated. For example, the smart contracts will automate quite a lot of the binary decision-making aspects. So I think that it still does not remove or disintermediate in a huge way, but over time that might change. So I think it's still an evolving process, but right now for sure, a lot of work needs to be done. And I don't think firms that offer tokens or firms that manage them and offer digital token marketplaces can do so in silo. So I think it's kind of us building around whether it's banks or whatever, building around that ecosystem and maybe rethinking our value contribution to that.
Well, speaking of, markets that the fintech revolution has brought about all of a sudden, let's talk about another term associated with real assets and fintech, and that's NFTs. So we often hear about NFTs in the realms of art, in the realms of establishing provenance or ownership. What is the use case for NFT in the property sector as you see it?
This is really quite exciting. And I just wanted to say that before I begin, but we we know that NFTs are what they are, right? I mean, nowadays, if you don't know what it is, it's kind of people used to tell me, oh, Rani, it's a fad, or how do you make sense of it? A lot of feedback around it being quite ludicrous, right? And actually, if you're not really sitting in the context of that world, you're kind of missing out on what exactly is happening there. And basically, NFTs are non-fungible tokens, so you can't exchange them for fiat. You don't get money back. There's a unique identifier, and it's great for collectibles, right? In the past, digital art used to be, copy and paste, right? I can copy and paste, and there is no way I can protect the value of the art I created. And now with tokenization, with people and with a Singaporean investor spending 69 million on it,
Who I interviewed, by the way.
Oh, amazing! Oh, you
Yeah.
must tell us a bit more about that interview.
in a while, but
okay, you can jump in when I talk about aping in, because that's exactly what was happening, aping in. So what's really interesting is that you see that has changed, right? So digital collectibles are now becoming or have become a thing. Even on Twitter now, you can verify that you're owner of a certain digital asset or NFT, and it's kind of why people do that. They talk about it, they tweet about it, and there is a community that's building around it, and it's gaining quite a lot of momentum from there. So that is the setting, right? Where real estate comes in is pretty interesting. I was going to give the example of the Bored Ape Yacht Club because I found it really fascinating. A bunch of apes just doing different things and, running a $600 million sales volume in a year. It really just tells you that aping in means, you buy the crypto or the NFT without considering the risks involved. And why am I calling this out? Because you see, what I've realized talking to a lot of investors is that NFTs is becoming a digital status symbol, right?
And a way to flex.
Yeah, online,
display.
right? This is my Lambo, right? And I think what is really interesting about that is you see that with increasing participation from various other companies, technology companies, it is becoming what I would call the online luxury collectible space, right? And if one would liken it to that and think about the real world use cases and just kind of projecting that to online or on the chain, you can see so much of that happening. I think there are two areas where real estate comes in. One is in the physical world and one is in the virtual world. In the physical world, there are use cases where you can NFT your prized property. And again, I would liken it to, luxury, really amazing location or, very unique property. And there is one use case that is being explored by the TechCrunch founder, Michael Arrington, who auctioned his lot in Kiev, I think for about $20,000. So I think there is an idea around that. Now, not living in it, does that mean that, even owning it means something of a symbol? It means something, I think that is really the discourse that will go on, and as we kind of get deeper into understanding this new space. But also what's really, really interesting is how people are buying virtual real estate.
Yes.
And with the metaverse and companies like Facebook going meta and Decentraland and Superworld, there's so many options for people to own real estate by NFTs online. So what's really interesting about Superworld, just a sidetrack, is it's geographically mapped to 64 billion plots of equal size, covering the surface of the earth, right? So you could literally buy what you feel like on Earth and pay about, I think, an average of 2,000 US dollars, which is the average spending amount currently on Superworld and increasing, right? And so it's just an interesting way of thinking about real estate, not just the physical, but also the metaphysical, right?
Mm.
And what was really fun was when I was reading about the Mars house and understanding the logic behind it. And I think increasingly, Mars House was sold for 288 Ether. That's about $500,000 US dollars thereabouts at that time. And the fundamental belief that is the thread behind this momentum is that people will be spending more time in digital homes, in digital spaces, in digital offices. And that means that there are more avenues to monetize virtual real estate within the metaverse, because it makes it more plausible, right? I could then lease out billboards on the metaverse, say in Superworld, and then advertisers could advertise on it. And while you're on my golf course, which is my NFT, because I like Florida, all of you can come and visit my golf course, and we could all, it's really what's going on right now, is that creation online. And I think it's quite exciting. It's an interesting space to watch.
It really is. When I spoke with Vignesh, the buyer of Beeple's Art, spent 69 million in Ether on it, and he said he doesn't own any property in the real world. So he's asset light in the real
Wow.
world, but asset heavy in the virtual world. And I said, what are you going to do with this piece of art? And he talked about displaying it and the possibilities of a virtual museum. And he was very, very passionate. This was back in February, way before Facebook talked about changing its name to Meta, right? Very passionate about his belief that we were all going to be spending a lot more time in this world that twins our world right here. So yeah, fascinating possibilities. But if we switched a little and we asked, in terms of public awareness and the use cases, do you think people are open to buying virtual land, or the flip side of that, to using cryptocurrency to buy physical assets?
Okay, so the two questions. So the first one is, I think actually I used to think that it was a little bit muted, but when you really get involved and you talk to the people who have a lot of skin in the game and who do this day in, day out, and recently with the Singapore Fintech Festival and our direction with Web 3.0 and all sorts of things going on in the US and in the UK, I really would say that awareness definitely has increased tremendously. What that means, though, is that there is greater responsibility for all of us who are stakeholders to ensure that there is accountability for what's going to happen next. Now, there's always going to be movement and momentum, etc. But how do we make sure that it's done in a way that is responsible and accountable to the larger public? Right. And I think that's really where I would say awareness is one level of building trust. And then there are many more levels to go when you really feel like you can trust the system. And I think that journey has definitely started and is probably halfway there. And I think definitely with more time and greater understanding, greater regulatory protections, greater legislative measures, and basically having more protections around it, trust will also increase. So I do see the potential for it to be there. And of course, to each his own, like Vignesh believes that the metaphysical world is where he prefers to be. And so I think we need to account for that diversity of pursuits as a country and as a region. And to your second question, whether I would use my crypto to buy physical real estate assets or just buy a house or something. Well, actually, currently there is no way or no seamless way, I think. I don't want to convert my crypto to fiat and then possibly definitely be subject to capital gains tax or anything like that. So I don't want to lose out on that. But I think where I do see some use cases coming out, actually even in Singapore, where if there was a stable coin, which is a coin that basically is backed by an existing currency, then I would probably be able to just use my stable coin, to pay for that physical property. And I think that's also where digital currencies owned by governments, etc., they're also looking to operate in that space. As recent as a couple of months ago, even in Singapore, there's this company called Xfer that has created a XSGD token, and XSGD is backed by real SGD. So it's a stable coin. It's not subject to the fluctuations of Bitcoin or the other cryptos. And so if I were to do any conversions, they would be at the prevailing FX rate. So it allows for me to be less exposed to currency, even cryptocurrency risk. And so I think that is actually very interesting also as a space to watch for use cases for using crypto without changing it to fiat and then buying all sorts of things, including real estate.
All right. Well, speaking of hot spaces to watch, I'm going to ask you to look into your crystal ball and tell us, what innovations do you think we need to see or could see in future in the realm of fintech and real estate, Rani?
Well, I think actually it's not just in the realm of fintech and real estate, but it's in the realm of everything we do these days. Big data, AI, and in particular for real estate, I find really exciting Internet of Things, or IoT. I'm just going to give maybe two examples to make sense of it, and it's really also underscores where I think the future trends are headed. So, WeWork. It works with a company called Factual. It's a data company, and basically this data company digitally maps, categorizes, location information, all your landmarks, your transportation, your community sites, your local landmarks, and everything you would desire from a location, right? And it does it over 52 countries, and then has an index of must-have amenities within any potential office location. So basically, you have all the data points you need to make in one place across 52 countries to select the best office location. Factual works also with Amazon and Uber. If Amazon wants to find the best place for warehouses, there are enough data points in Factual to build insights to select with Amazon on potential office locations. So, when I look at this really, and Factual can sell this data set, right? It's actually data that can be used by anyone looking for the best space. We actually see that the space is for data to provide insights, basically driving your decisions of where to buy, where to put your capital, which real estate, why, being even more pronounced. And if you don't have all those data points and your competitor does, you will be missing out on ways that you could kind of squeeze value out of many things, right? And there are three things that I think would be very important that I'll talk to when I'm talking about future trends. IoT is really interesting as well. And Singapore does quite a lot of this, actually. So basically, it's like devices that are connected digitally and collecting all the data around it. I give you some examples. Could be like, drones that are doing site inspections, especially in remote site inspections, instead of having someone be there. You have 3D imaging software. You have virtual tours, more than what they are, not just the residential version, but the commercial versions, where you're looking at cleanliness, you're looking at completeness, making sure everything is done without having so many people walking around the building, trying to figure out the maintenance of the building. And also a lot of connected sensors which are used, to track electricity consumption, which is very important now to rate your carbon footprint. So there's a lot going on. I mean, in Singapore, there's this example of Esquire that uses AI in combination with images captured at a construction site using the 3D cameras into a virtual replica of the site. And it facilitates the remote inspection of sites and the remote management of these sites as well. So I think these areas, big data, AI, and IoT, kind of all bring together a lot of data points we never used to have, right? In that degree or in that volume, which again, gives us so much more information that we can use to make better decisions.
Absolutely. So a lot to look forward to. And it's a huge industry, a lot of value to unpack. I mean, global real estate sector estimated 230 trillion, and we know it's such a bright spot for many Asian economies with rising urbanization rates, a growing middle class expected to drive long-term demand as well. So was there a third aspect that you want to speak to when it comes to the future of fintech, Rani?
Yeah, I think the future of fintech, the way I see it, is the couple of key trends that I would watch for, not just fintech, but also prop tech. And, with it now comes legal tech, reg tech, and all sorts of tech, right? Hacking away at processes that are cumbersome and paper intensive. And I think technology, I think we've been talking about technology, so I won't go into much of it, but technology will continue to play a vital role, right? Whether it's tokenization or data, Internet of Things, AI, it's almost a given that it's becoming a hygiene. So it's very important for real estate, people investing in real estate as investors, to be mindful that companies that you're working with give you that information that you need to make more holistic choices, and you're actually understanding a little bit more about the real estate investments that you make. And hopefully there'll be more standardization, more indexing across the board that is openly available, and that drives up the transparency, and transparency is always great, and that can drive up even more capital inflow. So that's technology. What I'm also really excited about is client experience being at the heart of real estate. And I know that's quite a different way of looking at it, but I think client experience will be a key differentiator. And I'm thinking about this of course, in a new context, post-COVID, hybrid places of work as an example. So, right now, even tenant engagement apps are out there, and you could basically, rate your experience with the service provided. Like, I didn't like the coffee machine, or that the way you've constructed the yard is not so great. And again, you're getting more and more insights and data from your consumers that are telling you what they want. And this can only improve your valuations. I mean, when we look at real estate, we're looking at yields, right? So technology will definitely drive up yields and also make things seamless, frictionless, etc. Client experience will also drive up your yields and valuations, because people want to work in places that they feel good. And I think it's no longer about just how it looks, it's also about how it feels and what it means. Is it sending a message, a right message? Are we overusing paper? Are we not thinking about how we're using electricity? And I think more of that consciousness, which we're already seeing in the world, will seep into real estate as well.
I was just thinking how post-COVID and prop tech, we think about buildings and more touchless experiences in a building, and prop tech enabling that, right? You don't have to call for a lift anymore. Not all of us at one time, for example, and air quality, indoor air quality in buildings of the future as well. So a lot in that area.
Speaking of air quality, I think it's a nice lead in to my last point, which is we want to do better as a country, but also as global citizens, right? So I think post COP26 and talking about the path to net zero, I find that the global climate conversation is no longer a sidebar. It's going to permeate into everything. And real estate investment is one of the big areas where capital will decide whether or not to invest in green buildings, in clean living. How do you as a building show that you have been meeting your green standards, right? There is enough of surveys out there to show that occupiers would pay a premium to stay in a green building, right? Because of the fact that they feel safer, their family feels safer, and they're also at the same time doing something good by the environment. So I think we'll see also existing buildings having to retrofit, right? You don't want to walk into an office with stale air. You don't want to know that, surfaces, how are they being managed? What are the chemicals that are being used? I think this consciousness, again, will come into how buildings will be certified. So existing buildings will have to be retrofitted in due course, and new buildings will want to be accredited. There is a much lower supply than there is demand for green buildings. So I think that space will naturally have to correct, and we'll see directionally that happening. And, I would be really happy, because that is really what I see in a world that is heading towards our, sustainability development goals. So good on. That's really where I'm really happy about that part, actually. So
I can see you're very passionate about this. We could do a whole show on this, Rani, but I think we're fresh out of time. So thank you so much for joining us. Rani Kaur is Managing Director, Head of Strategy and Business Management, Global South Asia and Middle East Bank of Singapore. I did that in one breath, Rani.
amazing. It's too long. Let's cut it short. And thank you so much, Michelle.
Well deserved. Such a joy to speak with you. Thanks for being here with us at
Likewise.
Property Guru.
Likewise. My absolute pleasure.